Hey there, welcome into Everything Money. We're glad you joined us. Today we're talking about a reaction to what Warren Buffett and Charlie Munger said in their Berkshire Hathaway annual meeting. Paul, Mo, you pointed this out in your live stream. Those two old fellas, they sat up there for like 6 hours.
Is that how long it was?
It was about 5 hours. The mental acuity at that age, they are so sharp and I mean, it's just incredible.
Charlie Munger's like 97.
I know.
Michigan grad, I know.
And sure
Incredible.
enough, and sure enough, these two old guys, they just look decrepit. They look like, the Muppets, the two Muppets that sit up in the balcony. These two are much more quiet. But the idea that their ways are old, Paul, they're just stuck in a different time frame about investing. And boy, when they spout those numbers, it's just incredible.
They don't get it anymore. I mean, they've only been right for 60 years. They do the same process. Money's money. They were told they were wrong and too old in 1999, 2000, in 2007, probably in 1966 before they were super famous. Probably everybody said you're past your prime, etc.
Yes.
So,
So tell me why both of you are in love with these two guys, what they've done. They mentioned their thoughts on Bitcoin. They mentioned their thoughts on...
Charlie's a lot more blunt than Warren Buffett. Warren Buffett is a big believer in the Dale Carnegie school of how to win friends and influence people. He'll never publicly criticize you. He'll try to be as polite as possible. That's why, I'll be honest with you, I don't take Warren Buffett's words when he's praising somebody. I take it with a grain of salt, because he's literally praised people and then 3 weeks later fired them. And then says, yeah, they were unethical and all that stuff. It's like, okay, well, you were praising them 3 weeks ago. Now you're firing them, saying they're unethical. They didn't just become unethical in the last 3 weeks. You know what I mean? So, but Charlie Munger's a lot more blunt. He's a lot more, hey, I'm going to say what I want to say about it. And he's a lot less wealthy than Warren Buffett. I think he's worth like $3 or $5 billion versus, 80 billion, 100 billion, whatever he's worth.
What did you take from the things they had to say? They had disagreements about which stocks they wanted to keep and sell. Apple, they talked about, the airlines and where they thought they were headed.
Well, first off, Charlie Munger's the first person that got Warren Buffett into buying better companies at good prices, as opposed to Warren Buffett's original investment philosophy. What he did for the first 15 or 20 years was find dog crap stocks in companies that were... Berkshire Hathaway itself was a textile mill that he bought that was absolutely crap and not doing well. And he bought it because it was spitting off. It had something, I don't remember the exact story, but he didn't buy great companies that had moats. Charlie Munger's the one that got him into that. So that's a big thing for them, because Warren Buffett's all about that now, but he has to be about that now because they have so much capital. They can't just go invest in $20 million companies. He has said before, if I had $1 million, I could make 50% a year. I guarantee it. Right? Because he'd be like, I'd find all these small companies that are completely undervalued and buy them.
So why are you in love with these two guys?
Well, they're disciplined. They understand numbers. They go against the grain, but they're not ashamed about it. They don't follow the hype or anything like that. And it just speaks to me. It just resonates very, very well with me.
Mo and I had discussed a couple staggering topics they brought up, Mo, about both the S&P from 30 years, S&P 500 from 30 years ago, and the car companies. Give us your thoughts on what he was saying.
So let's do the car companies first. This one I sent to all of our patrons in Discord yesterday. So he was going in and saying that specific sectors are not going to be the things that... Don't focus on specific sectors and think that this is the end-all, be-all that's going to be pushing through like nobody's business.
By the way,
he's talking about...
I hate to say this, but I'm going to say it. Uncle Paul has said this in many videos before.
Paul has said this many times.
So just remember this. And I don't mean it to say I'm Warren Buffett. Value investors all sound very similar. Mm-hmm. It's the one area in the world where you look at it and go, man, these guys all sound annoyingly similar.
It is pretty funny. When I was, because I'm almost done with the entire thing. It's about 5 hours long, but listening to them, it's like listening to you every single day.
Well, but again, I got a lot of my stuff from them.
It's like listening to Gary. It's like listening to
all the same stuff. Like I've gotten some stuff from them. Like I quote them all the time. I say, hey, Warren Buffett says this, Charlie Munger says this, but it's also all these guys, if you read them, it's reading the exact same thing over and over again. So anyhow, the thing I always said in the auto industry was when people say like, oh, this is the next sector. It's like, well, great, but just because it's a great growth potential doesn't mean that every company within it is going to do well. Marijuana has been the big thing, right? Everybody's like, oh, you got to invest in marijuana. Well, no, you don't have to, but go ahead, Mo.
So what Warren Buffett brought up was he wanted to pull out the auto industry from the early 1900s. He wanted to put on this slide, he was going to say, I'm going to take car companies that start with an M, just because he wants to be able to fit it on the slide. He could not fit the number of car companies back in the 1900s that were started with just M. So he had to go to MA, okay? On that slide, there were 40 car companies on that slide. Then he wanted to see how many car companies back then did try to jump in, because auto industry was the big thing back in the 1900s. There were 2,000, about 2,000 plus. By 2009, there were 3 of those car companies left, and in 2009, 2 of those went bankrupt.
And is that Ford, GM, and
Ford, GM,
Daimler Chrysler?
And Daimler Chrysler.
And GM and Daimler Chrysler went bankrupt.
And Ford is the one that did not go bankrupt.
Yeah. So guys,
that you think that this 2000 number? I mean, we're looking at what's happening now with all of these EVs. It's
not only EVs, everything, marijuana, everything, guys. Just because there's a big growth industry, as an example, let's say there's a growth industry where there's 1 million people right now who can use it. And the next 10 years, 10 million people are going to use this item, right? Pretty great growth, right? Great. If here there's 100 companies and here there's 10,000, does it make it that this is all? Now they're splitting up 10,000 customers each. Now they're splitting up 1,000 customers each. So every individual company now is going to go down. Like, you guys, it's the same thing as real estate, supply and demand. I always tell people, great, Dallas, Atlanta, all these great cities are growing. But if you have more supply going in there than growth, than demand, it doesn't matter. It's not going to work out well. But everybody forgets the supply side of every situation. And that's what happened in the auto industry. That's what happened in the airplane industry. That's what's happened in the internet industry. That's what happens in every computers. Gateway computers. Everybody remember gateway computers? All these computer companies that existed in the 80s and 90s, how many of them are around today? Dell, Apple.
Yes.
Was Acer around back then?
I have no idea.
I don't know. But the whole point is, guys, there's always consolidation. Just because an industry is growing doesn't mean that you have to be in it. You still have to find the right company to invest in at the right price. That's what everybody forgets. And they're big believers in that. They look at price last because that's the last thing that matters. They look at what do they think the company's worth. They determine what they can call intrinsic value. And then they compare their intrinsic value of the company to what the company is selling, what the company prices. And if there's a big disconnect, the benefit of price being way lower than intrinsic value, they buy it. If there's not, they avoid it.
Mo, talk about that astonishing fact with the S&P from 30 years ago.
Okay, so they looked at, in 1989, Warren Buffett took the top 20 companies based on market cap, and he put them on a list. And he said, he basically went through and he said, Amazon, Microsoft, Apple, et cetera. He said, do you think that these companies will be around in 30? Do you think that these companies will be in the top 20 of market cap in 30 years? He said, think on it for yourselves. Then he pulled up the list from 1989. There were 0 out of 20 from 1989 that were in the top 20 market cap on that list. You had companies like IBM on there, GM on there, but they were not in there. His point was, it's not different. It's not different this time. This is how things work. You can't just say because Apple is the biggest now and Microsoft is behind them and Amazon, they're going to be in 30 years the biggest and the best, because that's just not what happens. This happens many, many times over time. Just like Paul says, cycles happen. They're always going to happen. It's not going to change.
It's amazing. I was bringing it back to like normal people. It's amazing how many people will say, my dad used to say, and my grandpa used to say, and there's some funny comedians like, just because your dad said it doesn't mean it's right at all. He's probably flat wrong. But we always look up toward our elders. But then again, these guys who've seen every cycle multiple times over.
Why is that?
You're out of it, Paul. You believe in these guys, and I don't know, man. It's different, right?
Because people
tell you it's hold on a second. People tell you it's different because the new influx of new investors, the more amount of money ever that's gone in, all the innovation we've never seen with the Teslas, and it's different, Paul. Am I wrong?
I mean, it's not different because in history there's always been fluctuations of new money coming in and money leaving. But the reason they don't want to believe that is it's scary to think I've made this big bet here, and this guy who's really, really good at investing has said I might be wrong. Then you fight it for any blockchain. It's blockchain. Guys, it's not blockchain. Blockchain's been around. It is around. Like, I don't get this. Fine, let's go start. There were 4,000 digital currencies right now. Let's go start 40,000 of them.
Why not?
It's the same 4,000 to 40,000. Yeah. Let's go do it. It's blockchain, guys.
It'll be even more different then.
Oh, Paul, that's ridiculous. Was 400 to 4,000 not ridiculous? What made it so that this was okay?
Was 4 to 400
Was 40 to 400? Yeah. What made this okay?
Yeah.
This is the thing, guys. And I get it. Some people aren't going to understand this. And to you, I understand that. I used to be like you. I used to say the same thing. I used to say you should pay a premium for technology because it's easier to make more money. Wrong. It's still $1. You just factor that growth potential into the valuation. I used to believe that. Now, by the way, I was still right in that one, but I believe the whole you pay way more.
Yeah.
No, you pay more. The question is how much more? I didn't do the math. It will unfortunately take a very big fall in asset prices, crypto, real estate, stocks, all these things for people to learn lessons. And even then, we'll be lucky if a few people learn the lesson. We currently have around 34,000 YouTube subscribers. These are awesome people who, for the most part, they say, I get this. This makes sense to me. And that's why they listen. I don't know if we aren't going to be the people that have 10 million because 10 million people in this world can't agree with us on this thing. It's just going to be very, very difficult. It's for a small group of people. And if it doesn't make sense to you, I get it. But just like crypto doesn't make sense to me, you know what I do? I avoid crypto. The way I get attacking on crypto is when people say to me, Paul, you're missing out. You don't get it. It's about the fundamentals. There are no fundamentals. Please stop convincing yourself otherwise. Because if there's fundamentals, why is each crypto different than the other? What makes one better than the other? It's just people's perception. That's it. I'd literally rather have you go follow Uncle Seth and buy Magic the Gathering cards and baseball cards than buy crypto. And I'm not exaggerating about that one.
Try to think if crypto, let's take Bitcoin, for example. If it dropped 80% tomorrow, what fundamentals would be there to make you feel better to say that this is going to go back up? Don't say that it's just going to go back up because it has to go back up. What are the true fundamentals that would make Bitcoin go back up after an 80% loss? You can't say any. Like if you have a company like Apple that drops 80%, you'll be able to look at what Apple is producing and say, okay, I can see this thing going back up to where it was or somewhere near it. With cryptocurrency, you're saying, well, everybody on TV is saying it's going back up. People on Twitter are going to buy it. Stock twits, they're going to buy it. Let's go. There's no fundamental there, so you don't have fundamentals.
And when people tell me, well, Bitcoin, there's only so many Bitcoin. Great, there's only so many Bitcoin. We just showed you there's 4,000 cryptos, though. These are, Akon had a crypto. Everybody has crypto. It's just, guys, if you're buying into it, I'm sorry, there's no fundamentals. Somebody said to me, unfortunately, our Discord, Paul, you need a crypto expert. There's no such thing as a crypto expert. I'm sorry. I know that sounds bad. There is no such thing as a cryptocurrency expert. You know why? Because when I see articles on MarketWatch telling me some teenager is a crypto expert, come on. And this is literally the front page of MarketWatch a few months ago. Come learn from these 3 teenager crypto experts in high school. What? This sounds exactly like 1999, 2000, but you're right. It's different this time.
I didn't want to make this primarily a crypto episode. I mean, my thoughts was like why Warren Buffett, why we're in love with this thought process.
You're right.
Well, remember, Seth, we're not talking. We're just using crypto as an example. We're going back to the fundamentals that Warren Buffett and Charlie Munger were talking about.
So in the end, I try and play your role as a viewer, and if you feel like I said in the last video, Paul, if you feel like you're kind of tired of keeping up with these coins and their 30% fluctuations when Elon Musk tweets about it. This channel and your teachings, Paul, really spoke to me, and so it feels really there's a lot of weight off my shoulders knowing that my net worth, my retirement, and the money I may give to my children one day are now not fluctuating in some of these crazier hype stocks and coins.
They will still fluctuate,
sure,
but you'll be buying solid companies with solid earnings and solid cash flow where you'll go, okay. Now when I get more money, I can buy more of those great companies because I'm getting a higher return on my capital. You're still going to have fluctuations, especially in the stock market.
Yeah.
Look at Warren Buffett. Go look at their earnings from 2 years ago or whatever it was. I mean, from last year. The same quarter last year when the stock market fell, they had massive losses on stocks.
He showed that. They lost $50 billion.
Yeah, but
he's still going
to have those fluctuations, but that's not the point. The point is, at lower prices, if you believe in the companies at $100, you're gonna really believe in the companies at $80, unless something fundamentally has changed. That's it. That's all we're trying to teach here.
That's our style. If you've never heard of Patreon or ever joined one, feel free to click the link below to check out ours. The reason we bring this up is we've just developed out of nowhere, Paul. We started this 6-7 months ago. A community of like-minded investors that we all sort of think like this. So if you feel alone out there in your investment process, which I felt for many years prior to meeting Paul, if you feel alone and you want to join our Patreon, you can get in. You can get in on these thoughts, a daily conversation about moving forward. Go ahead, Paul.
Can I make a request?
Please do.
For all of you out there who quote Warren Buffett like it makes you a value investor, please stop. you're disrespecting the man. Like, you can't go criticize him in 1 second and then use his words in another one to make it sound like you sound smart. I've heard this 1,000 times from people who say, like, look at what's her face, Cathie Wood. If Tesla grows at 90%, it's a value play. Wait, I thought value didn't matter. I thought it was all about disruption. Like, all of a sudden, then they go, okay, well, let me try to sound like I'm a really smart person like Warren Buffett and Charlie Munger and Seth Klarman and all these really smart guys who've done very well. Stop with that. You're either a value person or you're not. If you're not a value person, look, Jim Cramer made 26% return on his money after fees being a trader. It works. But don't try to confuse. When you confuse what this is, you will lose money or you will not make as much money. Be true to what you are. Are you a value person? Are you a trader? Are you momentum? And find out the right process. We're trying to teach process here. My process is more fundamentally driven. I like momentum trading. Mo likes chart reading. I don't do chart reading. Not because I don't think it works. It didn't click with me. That's what we need to focus on here. Focus on what clicks with you and you will do well in the long run.
Join the Patreon. Tickle a thumbs up on the way out. You know I love you. And see you on the Discord. See you patrons. You know I love you. See you on the Discord, guys. Thanks.